Hey everyone, ready to dive into tax season 2025? I know, not the most thrilling topic. But stick with us.
Well, it doesn't have to be a total headache.
We've got this fantastic article packed with all the essential info.
Oh, yeah.
Deadlines, deductions, credits, income brackets, the whole shebang.
The works. And guess what? There are some interesting changes this year that could actually help you keep more of your hard-earned cash.
Okay, I like where this is going. So first things first.
Sure.
The deadline, April 15th.
Coming up quick.
It is, and it falls on a Tuesday this year. So that means no pushing it to the last minute.
Nope.
Hoping for a weekend extension? No, sir.
Got to be prepared. And speaking of preparation, before we get into the nitty-gritty, did you know about those incredible free resources the IRA offers?
Free. Okay, now I'm really listening.
For real. So one option is IRS Direct File. It's available online in 24 states.
Oh, no.
Perfect for simpler tax situations.
More states are getting access to that? That's great.
It is.
And then, if your income is below a certain limit, there's also the IRS Free File program, right?
Exactly. Both programs are designed to make filing easy,
Yeah.
accurate, and they can help you maximize your refund. Definitely worth checking out.
Love it. Deadlines and free resources? Check. All right, let's talk about those dreaded income tax brackets.
Okay.
I know they can seem like a confusing maze.
Yeah.
But promise we'll break it down.
Imagine it like a tax staircase. As your income grows, you climb higher.
Okay.
Each step is a new tax bracket
Gotcha.
with a slightly higher rate. So the more you earn, the higher you climb, and yes, the more taxes you pay.
Okay, I like that visual. The tax staircase. So what does the top step of this staircase look like in 2025?
For the top individual tax bracket, the threshold is $609,350.
Yeah.
You're looking at a 37% tax rate. Instead of listing every single bracket, though,
Yeah, no need to bore us with all that.
let's just focus on where those big jumps happen, where things really change.
Okay, give us the highlights.
All right. So for individual filers, watch out for that jump from 24% to 32% when your income exceeds $191,950.
Oof, that's a big one.
It is. And for married couples filing jointly, that big shift to 37% hits when their combined income surpasses $731,200.
Gotcha. Good to know where those cliffs are. Now let's talk about deductions. That's the part where we hopefully get to keep more of that money we worked so hard for.
You got it. There are two main paths, standard deductions and itemized deductions.
And for a lot of people, the standard deduction is kind of a no-brainer, right? Especially if your tax information is pretty straightforward.
Yeah, absolutely. It's a fixed amount you can subtract from your taxable income. And for 2024, it's $14,600 for individuals and $29,200 for married couples filing jointly.
And don't forget about those extra perks for seniors.
Oh, right. If you're over 65, you get an additional standard deduction, $1,950 for single filers or heads of household,
Right.
and $1,550 for married couples. Every little bit helps.
Absolutely. Now, I know some of our listeners might be thinking, wait, what about itemized deductions?
Yes.
Don't worry, we're going to dive into those details.
Very well.
But first, a quick break. Itemizing, that's where things can get a little,
A little more interesting, right?
yeah, a little more interesting, maybe a little more complicated.
It can be.
Yeah.
If you're looking to potentially, maximize those deductions, this is the path to explore.
Okay, so let's unpack this a bit. When we talk about itemized deductions, what are some of the big ones that people should be aware of?
Well, there are three, I guess you could say, key areas that often come into play.
Okay.
State and local taxes, SALT,
Yeah.
mortgage interest, and medical expenses.
Okay, so those are the biggies where you might be able to really lower your taxable income.
Absolutely.
First up, SALT. This can be a big deal, especially for folks living in states with higher taxes, right?
Absolutely. So you can deduct up to $10,000 in property, sales, or income taxes that you've already paid to your state or local governments. Now, this cap, it was put in place back in 2017, and it's really sparked a lot of debate, especially in those high-tax states.
I bet.
Some folks, they argue it unfairly penalizes those taxpayers.
Interesting. So it's not just a simple deduction. There's like a little bit of a political baggage attached to it. Okay. Next, we've got mortgage interest. This one's big for homeowners.
Oh, huge. So typically you can deduct the interest paid on the first $750,000 of your mortgage debt.
So?
However, if you bought your home before December 16th, 2017, you might be eligible to deduct interest on up to $1 million.
Wow, that's a big difference.
It is.
So big incentive for folks who bought before that cutoff date.
All right, our final itemized deduction, medical expenses.
Yeah, this one comes with a bit of a hurdle.
Okay.
You can only deduct medical and dental expenses that exceed 7.5% of your adjusted gross income. So really, it's most relevant for those who've had substantial medical costs. Yeah, not your average, doctor's visit, but more if you're dealing with some significant medical bills. All right, we've covered those basics of standard and itemized deductions. Now let's move on to something I think a lot of people are going to be happy to hear about. Social Security tax.
Okay.
This is where we have some good news, I hear, for 2025.
We do.
All right, before we get to the good news, can you give us a quick rundown of how this tax works?
Sure. So the Social Security Administration taxes a portion of your earnings at a rate of 6.2%. Now, if you're self-employed, you're looking at double that, 12.4%. But there's a limit to how much of your income is actually subject to this tax. It's called the wage-based limit.
And this is where the good news comes in.
This is it.
Okay, so what's changing?
So in 2024, that limit was $168,600. But for 2025, it's jumping up to $176,100. So let's say you're a freelancer who pulled in, $170,000 last year.
Yeah.
This year, thanks to that higher limit, you'd actually save over $300 in Social Security taxes.
Wow, a few $100 back in your pocket just like that. That is good news. Okay, so we've tackled deadlines, deductions, and the Social Security tax. Now let's shift gears and talk about planning for the future, retirement contributions, and those HSAs.
Yeah, these are the tools that can really make a difference in your long-term financial security.
Big time. Okay. So when it comes to retirement savings, 401ks and IRAs, those are the go-to options. And for 2025, there are some, I hear, exciting updates to the contribution limits. What are we looking at?
Right. So for 401k, the limit is increasing to $23,500.
Okay.
And for IRAs, it's going up to $7,000. So if you're able to max out those contributions, you're in great shape.
Don't forget about those catch-up contributions, too.
Oh, of course. Of course. If you're 50 or older, you can contribute even more. And here's another exciting development.
Okay.
Starting in 2025, folks between 60 and 63, they get an even higher catch-up allowance. It's a fantastic opportunity to really boost those retirement savings.
I love it. Every little bit counts, as they say. All right, now let's talk about those HSAs, or health savings accounts. They offer some pretty incredible tax advantages, right?
They really do. It's a triple tax advantage, actually. So with an HSA, you're saving for healthcare expenses pre-tax.
Okay.
Those contributions, they grow tax-free.
Yeah.
And you can withdraw the money tax-free for qualified medical costs.
So you're hitting, that tax-saving trifecta.
You got it.
And just like those retirement contributions, the HSA contribution limit is getting a bump in 2025.
That's right. For individual coverage, it's going up to $4,300. And for family coverage, it's jumping to $8,550.
Okay.
So if you're eligible for an HSA, maxing out those contributions can make a big difference.
All right. Before we move on to the final part of our deep dive, let's touch on two more important topics: the child tax credit and filing statuses.
All right. These can have a real impact on your overall tax liability, so worth understanding the basics.
For sure. The child tax credit is obviously a huge benefit for families. In 2024, it's worth up to $2,000 per qualifying child, right?
That's right. But keep in mind, there are those income thresholds where that credit starts to phase out. It begins to decrease once your modified adjusted gross income exceeds $200,000 or $400,000 for married couples filing jointly. So,
Yeah, so it's not a, one size fits all. Higher income families might not get the full benefit there. Interesting. All right, and when it comes to filing statuses, a distinction I hear come up a lot is single versus head of household. Can you quickly break down the difference? How do you know which one to choose?
Yeah, so choosing the right filing status can make a real difference in your tax outcome. Head of household, that's for unmarried individuals who maintain a household for a qualifying child or relative.
Right.
It actually offers a larger standard deduction compared to filing as single, and you'll benefit from more favorable tax rates.
So head of household can potentially save you a decent chunk of change if you qualify. All right, that covers a lot of ground. I'm already feeling more informed and a little less stressed about tax season.
Yeah, I love to hear that.
Before we jump into part 3, anything that really stood out to you in this section of our deep dive?
What really struck me is just how many resources and options are available to taxpayers these days. Whether it's those free filing programs, the various deductions we talked about, the opportunity to boost retirement and HSA contributions. I mean, there are so many ways to save money and plan for a brighter financial future. It's all about being informed and being proactive.
All right, welcome back to the deep dive. We're going to wrap things up with some advanced strategies and, of course, a little myth busting.
Oh, always fun to debunk those tax myths. There are certainly some misconceptions floating around out there.
Yeah, for sure. Okay, one strategy that's always kind of intrigued me is tax loss harvesting. Sounds a little bit like, we should be grabbing our gardening gloves.
Right.
But I have a feeling it's a bit more nuanced than that.
It does have a catchy name, for sure. It's actually a really savvy way to use your investment losses to your advantage.
Yeah.
So essentially, you sell investments that have lost value to offset any capital gains you may have realized elsewhere.
Okay, so if some of your investments haven't really been performing well, this is a way to kind of, balance the scales, use those losses to potentially reduce your overall tax liability.
Exactly. It's especially helpful if you've had kind of a mixed bag of investments, some winners, some losers.
Right.
Tax loss harvesting can help you strategically manage those gains and losses to really minimize your tax burden.
Okay. I'm starting to see why they call it harvesting, like reaping those tax benefits.
Yeah.
Okay, let's move on to those tax myths. One that I hear a lot is about the home office deduction. So many people have been working from home lately, but it seems like the rules around this deduction are a lot stricter than people realize.
Yeah, you're absolutely right. Just because you're working from home, it doesn't automatically mean you qualify for that home office deduction. The IRS requires you to have a dedicated space in your home used exclusively for business.
So working from the kitchen table or, squeezing in a desk amongst your kids' toys, that probably won't fly.
Unfortunately not. It really needs to be a distinct, separate area used solely for your work. So it's really essential to understand those rules before you try to claim this deduction.
Absolutely. Makes sense. Another myth I often hear is that if you get audited, it automatically means like you did something wrong.
Oh, yeah.
That IRS is coming after you. But I'm guessing it's not quite that dramatic.
Not at all. Audits can happen for a lot of reasons. Sometimes it's completely random. Other times, it's because something in your return just triggered a flag in their system. It doesn't necessarily mean there's a problem.
So not an automatic reason to panic, more like a chance to, clarify some information.
Exactly. If you do get audited, just be prepared to provide documentation to back up the information on your return. The key is to stay organized.
Right.
Keep good records throughout the year.
Good advice. Always better to be prepared. Okay, before we wrap up this whole deep dive, I want to touch on something I think is really important. The emotional side of tax season. I mean, let's be real. Taxes can be stressful.
Oh, for sure. It's really important to acknowledge that stress and anxiety that a lot of people feel during this time of year is completely normal.
Yeah, they can feel overwhelming, especially if you're not familiar with all the rules and regulations.
Absolutely. My advice is to just take it one step at a time.
Okay.
Break the process down into smaller, more manageable chunks. And don't hesitate to seek help from a tax professional if you need it.
Yes. There's no shame in getting a little expert guidance.
Not at all.
And remember, we're all in this together, right? It's a universal experience. There are so many resources out there to help you navigate this whole thing.
You got it. Tax season doesn't have to be this dreaded thing. With the right information and a little bit of preparation, you can approach it with confidence. And who knows, you might even find ways to make it work to your advantage.
That's the spirit. Okay, well, on that note, we've reached the end of our tax season 2025 deep dive.
It's been a pleasure sharing these insights.
Absolutely. We hope you learned some valuable tips and feel empowered to, tackle your taxes head on.
Absolutely. Knowledge is power, after all. The more you understand about this whole tax system, the better equipped you'll be to make smart decisions for your financial well-being.
So go forth and conquer those tax returns. And remember, you've got this.
Happy filing, everyone.